following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Is this different? I hope so. Good to be back. Thanks for some of the comments in the den. This has been the craziest month and a half I've ever had, especially health-wise. So good to be back on TFNN. Thanks for all the nice comments along the way from some of the hosts, and some of you guys sent me emails just really uplifting relative to what I was going through. Watch out having surgery in a third world country. That's what I'll say. It's the bottom line. If you, a ruptured appendix can get out of control, and especially if you go into the hospital. With all these crazy things that are going on in these hospitals, all these little bacteria that are floating around, what happened was I went in, kind of was okay, came back out, actually sneezed, ripped a lot of things that they had done internally, stitching up things, and then the hospital handed me an infection when I was in there that time. Had nothing to do with what I was in there for. Had a fever for about 2 weeks. When I came back initially, I seemed like ready to go, ready to rock and roll. But that took a while to get past the pneumonia that I caught in the hospital, and then had to travel back here. So just thanks for hanging in there. This has been a heck of a month and a half. So I thought we'd really start off with the S&Ps and, kind of do a little dissection on what's happened. Do a little dissection on what's happened since I've been gone, and I'm going to go back to the charts. And I think, September 15th is when I was starting to travel. That was back in here these 2 weeks, if you're looking at the screen right now. And, we had some kind of MOs we were trying to stay on during those days, looking at our breath situation, trying to find inflection points to lean against on the short side on the S&P, that is. And I'm going to go back in time. I'm going to pull up our scanner here. You know what, Marshall? I'm looking at this comment in the den. I just then they got to try to find the right antibiotic to try to get you off the staph infection or the pneumonia or whatever you catch, and that's kind of a shell game. I wasn't that impressed how they were dealing with that, but I'm alive. So taking a look at our, kind of broad spectrum look at the indices in general, you'll see that the daily, we've got some kind of global turning happening now, but let's just kind of go back in time a little bit here. Let's pull up our S&Ps and let's look at our breath situation. This is a new version that's actually got some alerts that we're going to be kind of pounding out to you guys up in the upper left corner. Really proud of this version. Also, to mention what's going on in this scanner version, we've got all the previous features, which I love, breath charts. We're going to go over that in just a second. But if you go into the home screen, what we've done is we've kind of pre-packaged, which I think will be very, very interesting for you guys to have, is kind of a long-term uptrend relative to profiles type thing. Picks out those particular instruments, long-term downtrend, uptrend pullback, downtrend pullback, uptrend reversals. These are all pre-canned, just, instead of going into the dashboard and, doing sorts, custom sorts, things like that. These are just kind of hotkeys that hopefully, downtrend reversal, we're going to see things that are, kind of starting to turn, that have been in a downtrend relative to profiles, just things to keep your eyes on. And we're actually going to put in a lot more custom sorts, double inflection points, triple inflection points, trying to make this easy for everybody. And also, the name of the game always is more freedom. And to have more freedom, you need things kind of pre-canned so you don't have to do a lot of work that, manual labor things like that. So we're trying to, again, allow you to have more freedom when it comes to trading and more time. So let's say going back to our dashboard, let's just pull up the S&Ps and let's look around and see what happened here. Going back to let's go to our daily or let's go to our 240 for a second. And again, you can, this is kind of cool because you can. Let me reset that real quick here. Okay, so you can zoom in on a certain section. This thing's come a long way. I appreciate you guys hanging in there while we've, kind of been upgrading this thing along the way. But, we've got our price chart derivative down below on this time frame, and we've got our breadth charts above. And I'm going to take out the middle ground. And as you zoom this, it also snaps the bottom chart. And you kind of see relative to price action. We can't give you, by exchange law or whatever you want to call it, these are all derivatives. So, we're not. This thing updates in real time, but just for guys who are just joining us, this is one of the coolest pieces of software ever because you don't have to subscribe to exchange fees, and you basically can get real-time derivative actions as they happen, and hopefully, providing the inflection points in the instruments themselves, including the major market indices, and I'll go into here. These are a lot of futures, actually. I'm sorry. We go back to futures here. So, we're looking at the S&P minis, the inflection points I just showed on my charts. Got an interesting setup right now we want to talk about. But hopefully, knowing where the multi-time frame inflection points are in a snapshot, I think we've covered so much ground here. I'm going to go back to my S&P futures breadth charts. And if you're just joining us, I'm throwing a lot at you, but as we go into these breadth charts, we can see where historically where these things have turned, and also hopefully block out one side of the marketplace based on the time frames you're trading on. So the most recent, I'm going to go to our daily for a second. I was just kind of showing that for example. I'm going to kind of snap back here, and we're going to kind of look at what's happened and when the most recent turn on October 3rd really started. We had, just to go way back in time, August 19th, the daily started really turning over in a big way. That's when we started having this big downturn. If you can kind of notice relative to this price chart, this is so cool to have this, guys. And then, when the kind of worm started turning again on our intermediate time frame, 10-3, and on an intermediate time level, as these things turn, you've got some trading opportunities on the long side, but when you go back to the weekly, you pretty much, let me re-gauge this, you pretty much have to seriously pay it. Like there's our big long-term turnover, 814. We saw that on the daily. I think, what was it? Where was it? 8. I'm sorry. 819. It was about the same day that both of these really eclipsed themselves on the. Let me go back here. Might have turned earlier. Hold on. Let me see. What is that date? Yeah, the week of the 14th to the 21st on August. So, but when we started, turning on the daily on October 3rd, and then the weekly kind of confirmed it the week of October 9th and October 16th. And I'm not going to do a lot of Monday morning quarterback action all the time. You guys know that. I'm just trying to kind of see what happened in the month and a half that I was gone, just to kind of give you guys a little bit of a history lesson. Then we seriously had to start looking at buying support. Up until then, we're kind of sell resistance. It's okay to get stopped out. I'm going to show you this right now on the charts. Here's that the week of the 17th. This is a Monday. And when we started, this is going back in time again. When we started crossing below this 20, let's just call it 60, rounded off on the December contract. This is when, we really had a lot of things in our favor. We had our breath rolling over, going negative. We got below our long-term profiles, and we had done that on our dailies already. Here's the first signs. Actually, it was, what was this? 2080, 2078. And then the breath rolled over. This was all out, flat out step on the gas pedal on the short side. And, all along the way, as our breaths had stayed negative on our weekly and daily, you got to kind of pay attention to the VIX too. When the VIX gets volatile, you've got to be willing to drill down into lower term time frames to look at breadth crossovers then, because remember, as the volatility increases, our profiles are going to expand. And that means you got a lot more safe landing area, or not safe landing area, but you've got a lot more variance in the profiles, which causes variance on crossovers in the breadth. Again, I'll get into this a little bit more deeper in the next couple of days, but because I know I'm speaking gibberish to a lot of folks out there who are just joining us. For you guys who have been with us, you know what I'm talking about. So as the VIX changes and gets higher, you've got to be willing to look at these lower term 240 and 60-minute profiles, or 60-minute breaths. So as the long-term player was looking at this, we stayed below profiles. We were looking for inflection points to key off of, which we never really got any new profiles, which was actually bearish in general, even though we had spiked up a couple of times. When we get a new profile, you guys know that, and we see that yellow-orange bar, that's the indication that we've got a change in tone. Back in here, you're still looking, and again, I got stopped out, before I went into a coma state. I wasn't in the market that whole time. Somebody forced me to not roll the dice while I was in the hospital. But anyway, just kidding, guys. During this whole time frame, you were still allowed to look for shorting opportunities. And again, no new profiles, price action below profiles, profile appearing well above price action. These are all, indications that we use all the time. When we had that orange bar, then we have to start going, oh my God, all right, we got to pay attention to this. We're going to get a new profile. We can key off of this, all right? 10.5, that daily breadth, remember on 10.3 started turning, or that weekend. So when the breadth starts going positive on that intermediate time frame, you've got to be a little leery, because it never happened back here. You got to be a little leery. And as that breadth is positive on an intermediate time frame, even though the weekly didn't really switch gears completely, let me pull up our scanner here. Weekly didn't really lock in till the 9th, back in, kind of in here. Those daily indications, breadth positive, trading above profiles, we had this indication start here, and then this new profile eclipsing it, using close above, come back, use as support. You guys, if you guys watch this show, you've seen this is like a broken record. I hear the music. We're going to be right back, guys. We're going to finish up with the S&Ps and move forward.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. We're kind of dissecting the S&Ps using the scanner that two guys in particular have just done a rock star job on this thing. John De La Paz on the back end. You guys, you have no idea what it's like to try to crunch this amount of data into derivatives on 4 different time frames and make this thing as fast as humanly possible, updating every 60 seconds. When we're talking about this many global exchanges and be able to access this information at the click of a button. I don't think there's anything like this out there. In fact, I know it's not. And Demantis on the front end, one of our just rock star programmers on the C# side, has made this, in my opinion, this is the newest version. Here's the alert system he just recently built. We can alert you to things going on if you've got the scanner. It's not totally out yet. We're going to get it out this week. We're trying to finalize some of the latest versions, the turnaround keys, everything. He's made a front end GUI to access all that information in the database, and it's brilliant. Both of those guys have just done an incredible job. Don't talk about that enough. You guys just kind of see this thing and it's maybe pretty cool, but there is just an enormous amount of information being crunched on the in the back end and accessible on the front end. All these charts, these breadth charts, the information being displayed. This is not anywhere else, and it's extremely valuable. And you guys watch the show, I run the show completely off of this information. So that being said, we're going to go back to the S&Ps for a second, try to finish up here. So as we kind of the worm started turning on the 3rd on the dailies, and we kind of got above profiles, and we came back and tested. Then we kind of had the weekly turn, and Navigator crossed above 0 here. This is These are all not good signs for shorts. And I understand, that these inflection points from above the 245s, the 80s back in here on the weekly, we have let's see where we're at. The big number here that we focused on forever, around 2060. Look at this. We have breadth positive. Last couple of weeks, we got above this area. This was, when we start running into these areas and our breadth is positive on these long terms. This is our weekly. We normally try to lever against these inflection points, but we have to have a biased opinion and we have to have some leverage to do that, to try to ricochet off of this area. So, we talk about passing on, shorting situations like that because, we've got kind of big mama in our favor over here, this breadth situation that's telling us that most of the stocks or most of the internals of the index, and this goes for any index in the world that you're looking at relative to this information, we provide this. The odds are not in your favor. So even when we get into these prior big inflection points, the breadth needs to be negative or showing some signs that there's something wrong, there's something sick. And when we get the weekly close above here, breadth stays positive. You got to be willing to buy these pullbacks at that point, as nonsensical as it may be, relative to all the horse hockey going on, the $20 trillion debt, the political scene just being a farce, or it's my opinion only. But as we look at this, there's always trading opportunities on the contra side, in the other direction. But to get the maximum leverage, you want to try to have things lining up and try to block out one side of the marketplace. And that's what we talk about all the time. If you watch this show, is it okay to be long? Not okay to be short? Is it okay to be short? Not okay to be long? And in that instance, the long-term probability in your favor, odds in your favor type scenario has been to buy support, buy breakouts, and not stand in the way of a train. Now, do we have some opportunities right now? Okay, so this is our daily on the S&Ps. And I always, if you watch this show, I kind of start with the long term, get the flavor of what the long-term trend is, trend is your friend, all that kind of stuff, and then drill down into the lower term time frames to try to regulate that concept. All right. So, as we look at this, we had the orange bar on the daily. We kind of hint of, hey, new profile going to appear probably. That's an indication, time to take some money off the table from the long side and possibly get into a contra trade situation on the short side. So when we come back, we're going to get into what's in store for the future, which I know everybody wants to hear about, instead of Logan looking at all the charts in the past and painting everything. Hey, you should have done this, you should have done that. That's over. Let's move forward.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new Market Safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, doing a little technical check here. For the guys in the den, I was just alerted that in my return to the scene here, I got a little bit of technical difficulty. Are you guys seeing this bar on 11.2? Somebody said to the far right, it's just not happening. Are you guys seeing this in the den? 11.2 as I'm moused over here, the last weekly bar. I think so. Is that yes or no? Yeah, I got 11.2. Okay. Okay, so I'm assuming no prices. All right, we're gonna. Okay, got it. We're gonna fix this tomorrow or before tomorrow, obviously, and I will spend some time on this. I apologize. As long as you see the last bar in the box, you know, the profiles, I'll kind of yell out the prices as I mouse over these things. There's also some prices over here. I'll tell you what, I'll put this here because when you know, this is kind of cool. Kind of cool to me. Anyway, here we go. So there's that 2045. Okay, this is our weekly. We talked about this kind of S&P dissection, and I promise you we're going to get into the future here now. But as you close above these profiles, I want to pull up the scanner really quick and I hope you're seeing this whole thing, but maybe not. I want to pull up this. I want to click on this TAS says button, and these are all, these are the S&Ps. I can switch to any index in the world a number of different ways. But as I click on this, I want you to read something. Long-term TAS breadth coincides with our intermediate-term TAS breadth. Both are positive. For the long term, any retracements into 2045 from above are to be looked at as primary long-term support. Okay, so we put this in. We're always open to suggestions, but we put this in so. And there's a lot of things in this scanner. We talk about them all the time. It's always, let's get the tide of the marketplace, as Basil has coined it, which I love, and figure out, where's the leverage? Is it okay to be long, not okay to be short, whatever, based on the time frames you're trading on. And this is a long-term TAS says for this. You got intermediate or long-term, intermediate, and short-term views over here, all relative to the profile information. But as you kind of look at this, and as you look at, I'm going to go back to our futures here, just looking at the index. There's that 2045 right there. These are automated text messages from a 40, 50-page document I created with a ton of if-then statements, conditional type, relationships that you can go kind of get a. Somebody's got a chart up here. Hold on. Kind of get a little bit of a dissertation. Text-wise on what's going on. So I'm going to go back to my dashboard here. Just wanted to note that that's in there. So when you don't really necessarily need these charts. You've got all the inflection points. The tide of the marketplace. If you're looking for long opportunities based on this situation, then you start drilling down with the filters, and we're going to kind of go through that. Okay. I will check into that, Steve. Thank you. It's good to talk to you again, by the way. So, it's find the tide of the marketplace, find the opportunities, and then use the inflection points as the battle points for entries, profit targets, and without question, the most important thing, playing the defense, the stops. So those 3 steps are really important with this particular scanner. Now, that weekly bar doesn't encompass this. So, what's going on now? All right, so this is our daily chart, and here is our pre-market. I know you guys don't see this because you've already said that you can't see the far right side of the screen. Let me move this out. Okay, pre-market, we're trading 20.75.50, and let me see if our dailies incorporate that. Okay, so what's happening is right now on the long term, the breadth is what it is. The market's not open, so a lot of the internals, the breadth won't incorporate that. But we've had the turnaround, we've had the profile, we're coming back up into a major inflection point, 20.77.30. For guys who are trading, and again, waiting patiently is a lot of the part of the game of trading. It's hard to sit in front of the screen with these buttons here and not hit them. I'm aware of that. I'm aware of it more than anybody. So 2077. So what have we done this morning? We've reached a high of 2076.75. I'm going to call that satisfied, rounded off 2077. For contra traders, you got an opportunity to leverage against this particular inflection point, which I love the daily and the weekly inflection points, as the major battle point areas, and I love it when they line up. So right now, contra traders, you got an opportunity there. You can put stops above, and your targets down below are that big 2045, 2042 area. Now, it's kind of cool. And as we go, this is our 240s. We use the 240s a lot of time to regulate the trade as we go back into this. Kind of see if you guys can see this. That 1003. There's the 1003 area when the daily started going breadth positive, right in there. We started eclipsing a lot of this. Then the weekly confirmed. The weekly's going to be a little bit slower. Remember that. And then these are our 240 profiles. We can use this to be a little stingy. Had a little pullback there, and kind of use it to regulate the trade up. I mean, there's a little bit of a noise factor there. You got to give yourself, it's not to the tick on the, you don't want to place stops at the profile. You want to give yourself a little bit of room. But again, getting stopped out is part of the game. Getting back in the game. Here's the inflection point. Get back. So, recently we started breaking here a little bit even on the 240s, and the daily had that new profile. So again, what do you do now? If you go back to the scanner and you go back into the futures area and you get a demo of this, if you've gotten a demo in the past, by the way, and it was a handicap version of this relative to what it is now, please contact TFNN. I'd really like you to kind of take this thing for a spin. It just does wonders for all the things we do on the trading side. So, as you look at this, there's that top. It indicates to you. And if I want to go in here and I want to say, what's kind of sitting at the top of, boom, there you go. You can do these filters. Wow, S&P's right there. So let me sort this, reset sorting. Okay, so as we look at this, we know we're at a major inflection point. Here's the 2073 on the 240s. So again, long-term breadth and intermediate-term breadth, you're kind of trading against that. But in my opinion, you've got that 77. If you can get back down below 73, which is the bottom of our profile on our kind of regulation of this trade, you've got a contra trade opportunity here. But remember, stops above 77 are going to have to be put in place if you're going to play this game. All right. The long-term guys, in my opinion, the long-term guys, you're still in this trade on the long side, right? If you want to be stingy, you got the 240s to regulate the stops below 2073 as it's already happened, and we're kind of coming back in, go below, retesting. I'm a little, because of what's happened on the daily, and here we go, because of what's happened on the daily and where we're at, we could take a little breather here on the upside, and that's kind of, 2078 was a big number before, and I'm going to show you that. There's 57. Let me go back here. There's that 78 number. That was that big breakdown number, if you remember. Now we're kind of getting, there's not a ton of reasons to just get long here. It's either sit on the sidelines or try to do a contra trade, in my opinion, right now. I hope everybody's at least seeing some of my chart. Okay, so we've spent, let's see, almost 3/4 of the show on the S&P. I just want you, and the reason I did that is because, to kind of trade the individual stocks, like Basil said, love it, can't say it enough, the tide of the marketplace, understanding what that is, so you can find opportunities drilling down into the pack. All right, now that being said, what we're going to do is we're going to go to the scanner, and if we're looking for stocks that just haven't cooperated, again, the theory is, and we talk about this all the time, market's going up, you want to find stocks and instruments that are showing their hand. Obviously, there's a lot of long opportunities when the tide of the marketplace is north. But, some of the stocks can show their hand early, being shorting opportunities. So when you get into these situations like we're at right now, and you've got you're leaning against the fence, you might make some points on the downside. Some of these stocks that have been weak pieces of crap that have not gotten out of their own way, and I'm going to go back to that. This is our S&P, universe that we live in here with the individual instruments. I'm going to do a little sort here. And in fact, what I'm going to do, I'm going to go back to my homepage with this cool little thing right here. Uptrend pullback. Boom. I'm going to click that. Voila. So we've got stocks that are kind of turning around, but I'm going to go back to my dashboard just so you can see that kind of picks them out for you. I'm just going to find, things that have just been continually a problem. And I'm going to pick, some of these are household names for if it ain't broke, don't fix it type situation. Whole food markets, Walmart. I'm going to pull up Walmart really quick. Man, you guys, these are again, Hershey Foods. These are the same names literally that we have talked about quite a bit. Chipotle Mexican Grill. So let's kind of look at some of the shorting. Now, some of the high flyers obviously are going to turn around just based on overextended situations, and they may, be some of the things you want to get into. It's a scary situation to me. I want boring trades at this point in my life, so I tend to stay away from those. But Walmart has been on our blank list for a long time, and we've used these profiles to tell us, this is one that shows itself continuously. Every time it rallies, you want to find inflection points to try to get more shorts off on this. And we've been talking about this literally since the 80s. And everybody's like, oh, Walmart can't go to 50. Things on their lows go lower. They can. Things on their highs can go higher. Things on their lows are not too low. Things on their lows are not on sale. They can be sometimes. But, generally speaking, if the market's heading north, and, this particular stock, I'm going to show you, obviously, news-related event there. But as we come into these inflection points and we talk about this daily, what's the trend, long-term trend down, you wait patiently. See that? See that breakdown? See this one? I don't know if you can see this. I hope you can. I'll slide it to the left. We get into these inflection points, trading opportunities based on long-term trend being sick. Okay? Now, what do you do now? Let me see where we're at pre-market with Walmart. Wow, 57.20. Amazing. Futures up. Well, a little bit or unchanged. Walmart, sick. All right, so the scanner picks these out. It picks out a lot of different scenarios. If you want to come in and use this to find things sitting on inflection points on the 240 daily turnaround situations, and I'll show you this in just a second. But I'm just showing flat out things that, let's look at WFM. WFM. Yeah. Yeah. This is, you guys, if you can see this, I don't know if there's a lot to be said here. You've had the, breakdown opportunities below 31.36. Is it over? Can the market pull back right now in general, that kind of S&P situation? Yeah. The theory is, if market's going up, stocks standing still or going south. If the broad market does turn around and goes south, those stocks will be a very, very nice situation most of the time to continue their downtrend in a nice, painless situation. And if the market ricochets back north, those stocks that are showing their hand early are going to be the ones that are not going to cause as much pain. Being strong stocks will just generally, that high beta situation, lift up and cause some pain. So, we're looking for easy plays. We're looking for stocks that are showing their hand early that are weak participants. So, let's look at this situation. Let's look at stocks that are trading above the box, stocks that are very, very strong, but showing hints of, these are stocks that have just started turning lately. Okay. Kellogg, Coca-Cola, Texas Instruments. So these Visa. So these are stocks that, here's all the inflection points, kind of run up, started showing their hand a little bit early, might take advantage of a little bit of a pullback, even though they've been relatively strong. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's TFNNADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Hi guys, welcome back to the show. Had a question in the den. Let me see where Intel is here. Okay, so what I did on the scanner, just kind of, the 240s relative to the long-term trend up on the weekly and daily. Found some opportunities there. We showed them, but kind of wanted to show ones that are really on a long-term basis, kind of worm is turning south kind of deal, which may be actually better opportunities for long-term traders, which a lot of the TFNN subscribers are. So, Intel, let's take a look at this one, in an uptrend, trading above profiles, but starting to break down on the daily. This is the situation on Intel. Here we go on the weekly. Here's the daily, starting to get compromised a little bit. If we have a market pulling back today, or, kind of trying to retest that 2045, 2043 area, I guess a healthy pullback, as they would say. Intel's got a nice little Maginot line for you to deal with there. 3401 pre-market. Where are we trading on this? 3362. Okay, so kind of starting to show signs that it is breaking down, and that's with the help from the marketplace. And the retest area on this will be 3109. So Intel, you've got an area to kind of play some defense around some stops above 34, and then you've got some kind of a hole in the marketplace for this thing to kind of drift down if we get some market help on Intel. So the question was, let me read this. Where's the question? Show at what point the bears will wake up and this market will actually have a long-term pullback. Again, everything we talked about, I've got to just go with the probabilities, in my opinion. That's the dollar. Let me get back to the S&Ps. The breast situation on the long term, let me just clear everything out, and let's kind of focus on this right here. Still relatively strong. The internals are going to open up in this, 30 minutes. And these are going to flip-flop around a little bit. But as long as these stay positive on the daily and the weekly, and this is kind of stating it very simply when you go into that TASS situation, I'm just going to have to say that, we're going to have to start looking at some breakdowns at least as long as the breadth turns negative below 2042, 2045, and anytime that happens any higher than that, I think you can start racing in. I mean, you've got a little bit of an opportunity here, but, all things considered, it ain't right now, at this point in time, it ain't looking that good for the bears, even, on a long, even on a short-term basis. So that's my answer to it. You just got to, wait patiently until some things line up. And we could race south from here without question, but you want confirmations in trading. You don't want to be just throwing darts at the board anytime you got a hunch. And we just don't have that completely right now. We do have an opportunity to lever around 2077 today on a contra trade short-term side, but it's not time to back the truck up with the short side. So that's my answer on it. All righty. All right, we got about 30 seconds left. I want to do one more kind of look here, something since we've pretty much covered one thing today, which is amazing. This is our long-term euro situation, and we talked about leveraging before around that 114.67 area, and we talked about not taking any longs on this. We kind of popped our head up, got into that area again. So we talked about targets ultimately down below on the long term around 108.99, 109. Those have been met. Get a lot of emails about this, and I hear the music. We're going to get into this more tomorrow on the euro, but we do have a new box appearing, and that upside's 111.37. Just wanted to say that. Guys, you've been great. It's been good to be back. Stay tuned. Larry Pesavento is out today, so I don't exactly know what they've got planned for the next hour. Stay tuned for all the hosts on TFNN.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.